What's going on, everybody? It is Daily Log episode 5, November 6, 2022. And we're going to go over the price action of what happened today and the forecast from yesterday and what came into fruition. So looking at, let's jump out to a 4-hour. I had yesterday you guys annotate these relative equal lows. So this was my draw on liquidity. This is something you should have been paying attention to as well. Now, my overall analysis didn't get played to what I wanted to happen. I wanted us to get into this fair value gap here, but this just acted as a breakaway gap, and we stayed inside this fair value gap. Remember, it is the body closures of the candles inside of a fair value gap, not the wicks. So even though the wicks went above the fair value gap, to me it's still valid as long as the bodies are staying beneath the either premium end of the fair value gap or the discount low, depending on if you are going long or short. So let's zoom down to, I'll quickly put this on, and I don't know why TradingView, it was lagging this morning. I'll have to record my live trades eventually, but I was paper trading on here, just trying to see if I could record it real quick, but for some reason TradingView, the paper trading was being very, very strange. But this was my original entry here. So I was selling up here and I was targeting the relative equal lows. Ignore all these other ones. I'm not sure. It was just bugging out. But I'll go over why I took that. ICT even took this trade as well. So if you look here, we have buy stops being ran prior to the opening of New York, right? So we went ahead and ran out the buy stops here, and then we have a market structure shift here, right? So this displacement lower, these are full body closures underneath. Okay, so somebody was asking in the comments today about how to determine a stop hunt and how to determine a market structure shift. Now, this comes into a lot of different variables and factors. I would say, is narrative, which is understanding the higher time frame, weekly, daily, 4-hour draw on liquidity. Where's price magnetizing towards, right? So we are looking at the 4-hour. The draw on liquidity was what? The relative equal lows. So we know in our head we're looking for bearish setups. And we're also looking for SMT divergence. SMT divergence can also really help you confirm whether or not it's a true stop hunt, because if one of them failed to make a higher high or a lower high, that can give you a strong indication depending on the narrative and the bias. The second thing for me is really experience and looking at the trade and understanding every single piece of information that you have, all the way from a monthly all the way down to a 2-minute. Now, it may sound like a lot, there's no magic pill, no magic concept that's going to be able to help you, or indicator is going to help you determine these things. That magic pill is experience, which is losses, lessons learned over years, forging yourself through the fire, which sucks. But in the end, you get to really be a master of these markets. So going over the model, we went ahead and ran out the buy stops. We had a displacement lower, and then we had our true market structure shift. I mean, this could have been your first market structure shift underneath this low or this low. Retrace back into a premium relative from the swing high to the swing low. And then we had our displacement lower. Now looking right at the open, we had prior to the open, the displacement lower. We had our market structure shift here. Okay. And then we have what? Our fair value gaps. So expect price to dig into the second one. This is something straight out of the YouTube model. Okay, you can enter at the first fair value gap, but expect price to possibly retrace into the second fair value gap. It's also what? Inside of a premium relative from this dealing range high to this dealing range low on the 2-minute. Okay, so you want your entry to be inside of a premium. This fair value gap was not inside of a premium. This was. Pay attention to the bodies though. The bodies closed inside of this fair value gap. And the main narrative and the main context of this whole trade besides the YouTube model was you're retracing into a fair value gap bearish on the 1 hour. The 4 hour, you're retracing into a bearish fair value gap. Pay attention to the bodies of the body closures inside of the fair value gap. The wicks are not as important to me. It's all about the bodies. If you see them closing inside of your PD array, fair value gap, order block, etc., that's what really matters, at least to me and what ICT is taught. Okay, so pay attention to the body closures here. None of them went above this fair value gap, right? On the daily, we were looking at this order block to be drawn into, right? I noted that yesterday. I also said there were relative equal lows building up here, almost 4 days. Okay, so all of that, you're adding all these things up in your head. And even if you don't want to do it in your head, take a piece of paper out, write down all the things that are for your trade. Why does this make sense? You have to understand why a trade makes sense in order to take it, right? You can't just blindly take things. You have to add all these different things together. And this is what I say is experience pays the most, okay? That's really what's going to get you ahead of a lot of other people. And what does that take? That takes you sitting in front of the charts during a session and putting trades on, whether it's demo, whether it's live. Eventually, once you get to live, you're going to start coming into roadblocks, which are emotions. Okay, so something I highly recommend is you guys reading The Mental Game of Trading by Jared Tindler. It's extremely helped my game of psychology, which it will bring you from a possibly losing trader to a break-even trader to a profitable trader, all based off your emotions. Okay, so I highly recommend you guys doing that if you're a struggling break-even trader or just trying to get consistently profitable. So we went ahead, if we look at the 2-minute or the 3-minute, this was our setup here. Okay, we have another small fair value gap here. To me, we're already so deep into a discount relative from this swing low to the swing high, and we're so close to liquidity. You can take that trade if you're comfortable with the risk. That's just not personally my model or my style of trading. Okay, so take this away for a second. This was to me the most valid trade, the highest probability, the lowest risk that you could have set up for yourself, right? Because you could have just placed a stop above this high here. You're at 7 points, targeting 38. Okay, so that's a 1 to 5. It's a fantastic risk to reward ratio, and you're taking partials along the way. Okay, so that was the setup for me. There was a small bullish setup here. I was paying attention to it because once we dug underneath these relative equal lows, I was looking to see if we could get a little bit better displacement. I've been caught a lot of times going back to the question of determining true market structure shifts or breaks. To me, this is the high I was looking for. Okay, so this is the most recent previous swing high. If you go down to a 1 minute or a 30-second chart, you could have found a high in here and we shifted above it, came back into the fair value gap and expanded higher. To me, I can get tripped up a lot on these. You know, sometimes you see that after you run out sell side and then price just retraces into a bearish fair value gap and then expands lower. So I don't really like that. I want to see a nice displacement higher. Now, the reason why after you start running this high up, and especially it's paying attention to time, like what time did this get down into? If you were still paying attention to this fair value gap, let's say for an example, you know, you're looking for this as an entry, you think you're bullish. Look at the time. This is right during the middle of lunch. So to me, that doesn't make any sense to take a trade during that time zone, right? And that's what helps is rules. Okay, so coming out of lunch, we're expanding lower. So that should immediately tip your hand off that, you know what, bullish setups are off the table. Overall, today was a okay day. I wouldn't say it was amazing, but it was definitely something that you could have logged in your journal and you know, learned from. Going into tomorrow, we already opened and dumped lower. We took out the previous day low. I really want to see price draw into the opening of this order block here and potentially the equilibrium of the order block here. That would be great. And then I might start looking for some potential bullish retracement higher. Not a lot, but I do want to see a little bit of a retracement higher. If nothing presents itself, then, we're probably bearish all the way into the sell side here. I have the 4-hour fair value gap noted here. I drew you guys' attention to this fair value gap last week, and I believe even in the weekly forecast, and I drew your attention to these down close candles, which is the daily order block. So what I'd be looking for tomorrow, maybe the rest of the week, we could maybe see a swing low form in here, and we can maybe get a potential bullish setup higher. Now, I don't know that for certain. I'm not extremely positive on that, but it's something I'm going to look for. We do have relative equal highs resting here, but we may just expand lower. So we'll see what we have for tomorrow. Like I said, guys, I appreciate you guys watching it. Comment, like, subscribe, share the video. Ask any questions in the comment section. I'm more than happy to answer it. It's definitely going to help me with some YouTube video ideas rather than just daily logs. So I really appreciate that. And until tomorrow, good luck and good trading.